Hi everyone, what's going on? My name is Jamie Palmer and welcome to another episode with the FOREX 8.0. Now in today's video, we're going to be talking all about liquidity trading. Liquidity trading with the binary destroyer. Now liquidity trading is normally reserved for institutional traders, bankers or traders out there just looking to have a different outlook on currency trading, because liquidity trading involves a different style of trading where normally you'll be looking for support and resistance, you'll be looking for areas where price goes overbought or sold. With liquidity trading, we're looking for areas or structures in the market where large institutional companies or traders out there will be looking to drive currency pairs up or down. And it's a very fascinating way of trading because it gives you a different outlook on how currency pairs move in the way they do. Now, the reason why I'm going to cover this is because we had an absolutely incredible webinar with the BD members last week. Yesterday, every single week we have a webinar with the BD members going over different styles of trading. And yesterday's webinar was all about looking for liquidity in the market, looking where buyers would buy and sellers would sell currency pairs. And the reason why I'm going to talk about it in today's video is because we had an absolute beautiful sell with the binary destroyer here, and as you can see here, price went straight into the money. Like there was no drawdown whatsoever with this sell here, and we had this absolute beautiful buy here. And again, went straight into the money. And I always say to people, you know, what's the difference between me or other BD members doing like a 95% win ratio and traders out there that are losing? What's the difference? Because it's not the strategy, it's not the indicator you're using, it's just general market, it's just basic market understanding, knowing what signals to take and what signals not to take. And I say to people out there, it's something you can learn. You know, it involves a lot of chart time, a lot of understanding why currency pairs move, a lot of learning about candlestick structure, support and resistance. It's something that everybody can learn. It's not about having some magic secret strategy or indicator, you know, that some people have and some people don't. It's just general market knowledge. It's out there for free. We teach it as well, you know, and unfortunately, you know, as much as you'd like to, you can't buy it. You know, you can't buy experience. It's just something that comes with a lot of chart time. So in today's video, we're going to be talking about liquidity. Now, it's funny because if you actually have a look at my trading history, I did a 95% in November. And I say every single year, I'm not going to trade in December. I'm not going to do it because it's December. I like to have a month off from the charts. I like to spend some time with family. It's Christmas. You know, why do I want to be working? But I've actually gone against my own rules and I've took 3 trades so far in December. 100% win ratio, but I'm not going to take any more trades. In fact, I'm eyeing up this sell on CAD Chef, and I've been looking at this for the past 20 minutes and I'm thinking, do I want to take this trade? Do I not? But I'm not going to take the trade. I'm going to stick to my rules. I'm not doing any more trading in November. Now, with that said and done, let's do some liquidity trading with the binary destroyer. Okay, so let's firstly go over this buy on USD CAD and let's break it down to the raw price action, raw candlestick analysis, and get a better understanding on why this trade won. Now, once you start breaking currency pairs down, in fact, trading becomes a lot more simpler because the less you have on the charts, the more easier, I wouldn't say easier because you can't really say that, but it more simpler your trading becomes because you've got less on your chart, so you've got less things to look at, I guess, less confusion. Now, as you can see here, okay, this is USD CAD 15-minute time frame, and to get a better understanding on why this trade won, we need to go over to the higher time frame, and we're going to look at raw price action now, and we're going to have a look at the 4-hour time frame. Okay. Now, to keep it simple, what direction is USD CAD heading on the 4-hour time frame? Up. It's heading up, okay? So this is an uptrend. So if this is heading into an uptrend, what does it mean? Okay, it means that there are a lot of buyers in the market. So, you know, there's a lot of people buying USD CAD at the minute because price is in an uptrend. So if we just follow the liquidity, the momentum in the market, we start to break it down now by looking at structure. And it's very fascinating once you start to break this down, okay? So if we just follow price up like this, you will see we had a nice little uptrend like this. We had a pullback, we had an uptrend, we had a pullback, we had an uptrend. We can call it here as well, pullback, uptrend, pullback, uptrend. And what this basically means is there are a lot of buyers in the market like this here. And what happens when you're in a trade and you start making some pips, you start making some money, what do? You close the trade off in profit, don't you? I mean, you're not going to leave the trade running. You close off in profit. So what actually happens here is people start selling their positions. They close it off in profit. Well, if there's no more buyers in the market buying USD CAD and people start closing or selling their positions off, then USD CAD starts pulling back. Okay, when this happens now, then I forgot what I was going to say. Then USD CAD becomes a better buying opportunity because, you know, people start seeing USD CAD pulling back and they think, I can get in at a better price. So we start buying USD CAD again. And then what happens here? Again, price rockets up. You're probably 70 pips up again. You're making some more money. You close your position off. And again, price starts pulling back. And again, you know, we just repeat the process. Now, the next question you're going to want to be asking yourself is, where would buyers close their position off and where would they start buying again? Now, where is the structure here? Well, let's just look at basic support and resistance. Okay, so I'm just going to mark it up like this here. So we've got an area. We've got an area just here. I'm just going to bring this across like this here. We've got an area. We'll just bring one here as well. We've got another area just here. And we've got another area just here as well. And in fact, we've probably got another area just there. So let's just zoom in now on each structure and area. Okay, so I'm just going to move myself out the way. So let's first of all focus on this point here. So we had a big rally up like this here, and we bounced straight off this resistance area here. Okay, see how this is a nice resistance area because we've had a number of touches. If I just bring this across like here as well, probably just bring it up in here. So this area comes in point as well. So as you can see here, we had a nice resistance area. Now what happened after this here? This resistance area got broken, as you can see this. So as you can see here, this resistance area got broken, which confirms to us that there are a lot of buyers in the market. Now, if resistance gets broken, meaning if price breaks above it like here, it means there's a lot of momentum. There's a lot of buying power here to break this resistance area. And what actually happens is price pulls up and then comes back down to this resistance area here. Now, like I said, what becomes resistance becomes support. And what does that mean? More buyers in the market. So there's a lot of buyers here driving that price up. Again, price comes up to this area here. I just moved myself here so you can see. And what actually happens now is price comes up, bounces off this resistance. This is where sellers start to sell their position. And again, price comes up. In fact, I've actually marked this up wrong because we've got another area just here. Okay, just there as well. Okay. And again, price comes down like this here. And people look left at this point now and they can see, this area of resistance now becomes support and more buyers in the market start to buy. This is where the liquidity is. This is where more buyers come into force. So buyers, again, break previous resistance, comes up, retouches, rockets up. Again, more buyers here. And again, price comes up, comes down. And again, all you got to do is look left every single time. So I'm just going to mark up where buyers have been buying this currency pair up, okay? And as you can see here, you start to kind of break the currency pair down and you get a better picture. This is where the liquidity, this is where the momentum is in the market. You know, price breaks structure, pulls back, liquidity, traders buy. Price breaks structure again, price pulls back, liquidity, people buy. Price breaks structure, creates new high, it pulls back, and again, more buyers in the market. Again, price breaks structure, pulls back, and again, more buyers in the market. Now, if we follow this all the way up, watch this. When I go back down to the 15-minute time frame now, and we load up the binary destroyer, we actually have an absolute beautiful sell at this structure here. If I just move this like this here, and I go back over to the 1 hour, 4 hour charts, you can see that area of structure just there. So if we just zoom in like this here, again, if we follow the price up, we had an uptrend, we had a pullback, we had a break of structure, we've pulled back again, and then we rally up here. So there's a lot of buyers here because we've now broken previous structure. And if we actually have a look at the 15-minute time frame, it lines up perfectly with this little buy signal just here. And this explains why I am able to kind of get a 95% win ratio, 98% win ratio, is because I see this happening on the charts. Now, this is just raw price action. This isn't magic. This is something everybody can learn. Let me show you NZUSD, okay? Now, look here, right, on NZUSD. We've got two setups here. Both the setups win, okay? This one went around, I don't know, 50. This trade went around 13 pips before reversing down. This trade here went instantly into profit. This trade here dropped 45 or 45 pips instantly. Without drawdown, it went straight into the money. Why did that happen? Let's break it down again. So let's go to some raw price action trading here. And again, we can see if I just mark up my areas again, this is on the 15-minute time frame. Again, it doesn't really matter what time frame you're using it on. You know, structure happens on all time frames. So I'm just gonna, I'll probably pop that like there. That would be a little bit better. And again, what's actually happened here is, again, prices we've obviously got this structure here. Prices come down, retouch this structure, come down, come back up, retouch this structure, and then dropped. Well, when we look at raw price action, we know there's going to be a lot of sellers here. We know, because looking from previous structure, there were a lot of sellers here. This is how, when you load up the binary destroyer here on the 15-minute time frame, you can see that absolutely beautiful resistance area, that beautiful sell just there, okay? Now, it's funny, we had a buy there as well. Now, if we actually line up, I just want to show you as well, if we line up that buy with, let me just hold on here, there we go there. If we just line up that buy here, that explains why there was a buy signal here. It explains here why this price went up, because there were a lot of buyers in the market. There were a lot of buyers here, because if we look left, we can see previous structure, previous support line. We can see that buyers bought here, And we know now when price comes back down to here that buyers are going to buy here. And that explains why that Mogwai arrow wins as well. And it also explains why that Mogwai arrow wins as well, because it's come up to previous resistance. And this is why I always say to people that you want to spend the time to learn why trades win. Let's look at CAD Chef, right? Okay, now CAD Chef is pulled slightly against us. I'm kind of glad that I didn't take this trade. But let me find you another trade that I would let me just pause the video. Okay, fascinating. Right, so Euro USD. I've got a back-to-back setup here. This is happening right now. Euro USD 5-minute time frame. I've got two signals here. I've got this one here and this one here. This one is a beautiful sell, and this one is not so much a beautiful buy because it's against the trend. How do I know that? Well, again, let's break it down using some pure price action. So we're just going to bring up some naked charts like this here. Naked. And let's just zoom out here and let's mark up our support and resistance. Okay, so we had our beautiful beautiful sell just there. And we had a beautiful buy just here. So when we zoom in here, well, just by looking at the candlesticks and raw price action, we know there's going to be a lot of sellers in the market here. How do I know that? Because of previous areas. We can see prices bounced off it, and I can see prices bounced off it here. So I know when price comes back up to this level that there's going to be a lot of sellers in the market, which drives the price down. And again here, I know there's going to be a lot of buyers in the market just here, because if I look left, I can see that price came down to this area before going back up. I know there's a lot of buyers in the market. So when you load up the binary destroyer now, it gets very simple. You can see why, okay? You can see why when I zoom out now and I start to mark up my support and resistance again. And again at the bottom here, you know why these setups win. These setups win because we know there's a lot of sellers in the market and a lot of buyers in the market. Now, the reason why traders or institutional traders call it liquidity is because there's a lot of stop losses here. You know, there's a lot of people selling here and there's a lot of stop losses here. Now, because there's a lot of sellers here, it means that, you know, there's a lot of sellers. There's a lot of momentum here driving price down. And as liquidity traders, this is where we would look to buy or sell currency pairs. We want to look at areas where there's going to be a lot of buyers or sellers in the market. And this would be a prime example of where we would sell and buy. Now you can see when we include the binary destroyer that, you know, we can spot these areas, okay? The binary destroyer is just indicating us signals, you know, buy or sell signals. And when we start to put the structure on, the support and resistance, it all starts to make sense. And like I say to people, this is something you can learn. It's simple, just structure, support, resistance, candlesticks analysis. You know, it's nothing special. It's not a secret. It's all out there. It's just being able to put it all together and see it on your charts. But yeah, I mean, I could sit and talk about this all day long, but I'm not. That's liquidity trading with the binary destroyer. My name's Jamie Palmer, and I hope you enjoyed today's video.